Hello, everyone. I want to welcome you to our Master Apartment Insurance webinar today. It's about taking your expertise to the next level. My name is Anae Augustini. I'm CEO of CID Insurance Programs, and our instructor today is going to be Michelle Belden, our commercial underwriter with a lot of expertise in apartment insurance. And also, Jacob Cole is our marketing coordinator. He works behind the scenes to make sure that everything runs seamlessly. So without further ado, let's take a look at the logistics that will be, that most of you know by now, is that you will be muted, but you'll be able to hear, but not speak. But your voice is important to us, so please pose questions in the chat room at any time throughout the webinar and ask questions. And there's no, stupid question. All questions are important, and we want to answer them for you. There'll be a quick survey at the end of the webinar, and we'd also appreciate your feedback so we can do a better job with each of our webinars. So let's take a look at what our objectives are going to be today. So Michelle's going to be talking about identifying the types of residential buildings and the coverages that they need. What are the changes going on in the industry? And they are evolving, so that she will fill you in on, what you need to be talking to your insureds about. Understand the underwriting guidelines, and those are also evolving and changing as well. So she's going to go through some examples. And then what's needed to get a competitive quote. So without further ado, Michelle, I'll let you take it from here.
All right, thank you, Anae. Hi, everybody, and welcome. So I'm just going to go over a basic definition of an apartment. I'm sure everybody kind of knows what this is, but just to give a little backbone to where we're starting from. So an apartment would be defined as a residential building with multiple units. Either can be a shared entrance with interior units, or one building with exterior units, and each unit you just enter from the outside of the building. Depending on the carrier, there are, like Anae was saying, and how we're going to talk about the changes, depending on your state and things like that, there could be different definitions on where you can pick up an apartment on commercial lines versus personal lines. So we will go through that. But for me, a definition of an apartment is having 5 units or more. Whether that is one building with 5 units, or maybe there's 3 buildings, 2 with 2 units and 1 with 1 unit, but they're on the same plot of land, so that makes that a complex, a total of 5 units. To me, that would be considered an apartment. Some carriers might not consider that an apartment because each building has less than 5 units, but again, it can vary. So the main goal with an apartment is defined as 5 units or more. And then there's also your single standing 1 to 4 family dwelling. So whether that's a single family home, a duplex, a triplex, or a fourplex, and those ones, depending on how you want to write the coverage for it, can be in a gray area because they can either be personal lines or commercial lines. Sometimes it comes down to the name insured on if it needs to be personal versus commercial. Sometimes it's dependent on the carrier, if they're even able to consider, that class code, the 1 to 4 family dwellings. And there could be other underwriting characteristics that could sway it one way or the other, or it could be both. Just kind of depends on the market availability and where it can be placed. So before we get into the examples that I have that we're going to talk about today, I want to go over the industry changes. I'm sure all of you are well aware that things are changing and this market is something else right now. We're, in our office, we're having to issue non-renewals pretty much every day, and I'm sure for you guys as well, you're getting those non-renewals from your direct markets or other wholesalers that you're using for your accounts. Just everybody is making changes, and since how hard the market is, it's definitely becoming a challenge to write coverage. I've been seeing an influx of submissions because of this. So trying to help where we can. We can't place everything, but we do the best we can. So I've seen a lot of markets pull back on the apartment class altogether, just leaving some carriers are just leaving states altogether, regardless of, if it was a profitable risk or not. The risk location, especially in California, if there's, wildfire concerns, that's thing. We've been dealing with that for a few years now with our carriers and what they're writing. I'm starting to see the wildfire and brush mapping happening in other states too, like Oregon and Washington. So I wouldn't be surprised if many carriers start, you know, adapting guidelines similar to what they've put in place in California, depending on how devastating and things like that where wildfires have been, and start making changes from that perspective as well. I've also been seeing, and I'm sure you guys have too, a lot of carriers are instead of exiting the market entirely on apartments or any other class, they're capping their building age. Some people are going back only as early as 30 years, which isn't that old. So it makes it kind of hard with generally that's more on your preferred, and I've been seeing it mostly on the preferred markets. They're making it, more challenging. They're trying to clean up their book and only write, the newer ones because they find them to be more pristine, which isn't necessarily the case. I have plenty of older buildings that look nicer than some of these newer buildings because, the pride and ownership these apartment owners have in their building and taking care of it and maintaining it. But don't sweat. We do have markets that will look at the older apartments. So we do still have some of those options available for you guys. But yes, like I said, there has been a lot of tightening up on that building age. I've been seeing more carriers run crime scores, and that's been an underwriting factor, and that's been, some reasons why certain risks are getting declined is because of the crime score. If you're in California, for the most part, if you're writing a non-admitted apartment policy, you're going to see a habitability exclusion on the policy. That's pretty much the case because of the losses that had been seen. A lot of carriers had already adapted it, and now some carriers are now adding it on as well. You won't generally see that on your admitted side of things because they still are offering a much broader coverage than your E&S carriers from that perspective, but that is something to be looked out for, especially when you get these non-renewals and you're having to remarket your risk. It may be going to a non-admitted market, so making sure to let your insured know that habitability exclusion would apply if it's on that policy. And then for your mixed use buildings, so that would be your, maybe there's commercial units on the bottom and apartment units on the top. I've been seeing changes. Same thing on the LRO side of things. This changes to the commercial tenant occupancies people are wanting to accept. So like I said, lots of things are changing. Everything's moving. I tell you, I swear I learn a new reason of a non-renewal from an agent, from a carrier for this, that, and the other every day. So we're all trying to keep up with it. So, if you have a question, feel free to reach out, and we can definitely see if we have an option for it. All right, so let's just talk about some apartment coverages and the types of coverages that your insured should be needing for their policy. So obviously the main coverage for them would be their property coverage to insure the building, and any other property components they may have. So whether they have some carports, maybe they have like a marquee sign or fences, or maybe they have like a dumpster enclosure, things like that. So that would be your property coverage that you would want to make sure that we're including to quote for. Some carriers for these other property components have like a property enhancement endorsement that will include a limit of coverage for those items. And then other carriers, if you're looking for higher limits or they don't have that property enhancement endorsement, it's something we could look at scheduling on so that there is coverage for all of those components. Your business income is really important. I get a lot of accords, some that don't have the rents on it. So that's a question I ask for all the time is what are their annual rents? Because we want to make sure we're offering in that business income coverage. And then also we have available the building ordinance coverage. We can offer coverages A, B, and C depending on the carrier. There may be restrictions, but those are available. We can also offer equipment breakdown. And like I was mentioning, the property enhancement endorsement, most of our carriers, if we're offering it on special form, we can offer a property enhancement endorsement. And it's generally something we can just add on for an additional fee to, broaden the coverage a bit. And then here for your GL, we got your general liability on there. Obviously an important coverage to have. Some people sometimes think they just need apartment coverage for the property and aren't looking for the GL. But it's definitely best to offer them as a package, offering both the GL and the property. In addition to the GL, on the GL, we can also add on higher deductible auto if needed. All right. So the next few slides are going to be example submissions that I've come up with, just to kind of go through what the underwriting process is and what I'm looking for when I'm reviewing a submission and the information that I may come back to you with, so you can get a quote. So for this first example, this is a 10-unit apartment building that's owned in the name of an individual. Like I was mentioning earlier in the beginning when I was giving those definitions, it's important to know the named insured and the number of units because, like I said, that can dictate whether a carrier can consider that on the commercial line side of things or the personal line side of things. I do have an example further down that will get a little bit more into that, but just to bring that up. So this apartment is a two-story one. It's 5,000 square feet, built in 1992. So it's only 31 years old. So with you would think, hopefully, with most markets these days, you would be able to put that through with most markets. But like I was saying, with some of these carriers, I just had one today come through and send me an email saying, "Oh, we're only writing things 30 years or newer." So that would be 1993. So this one for them would be kicked out. 1 year, it's becoming very hard. So they're drawing strict lines on the year built and things like that. So from that point, but I mean, it built in 1992. It's not that old. So at least to me, it's not that old because that's the year I was born. So I don't think I'm that old. But so they've only had their roof updated because they don't need to have their plumbing and heating and wiring updated yet. It's a newer building. Things are up to code. So only considering having that roof updated. With something like this, we're only the roof's been updated, but the year built. With our markets, we would be able to still offer special form replacement costs because, like I said, we have some markets that might say no because that's past that 30-year mark, but we have other markets that will consider it and aren't concerned about other components not having updated yet because they don't need to be updated yet. Within the building, each unit has a smoke detector and there's fire extinguishers present, which are important life safety measures to have. These are something that would be checked on an inspection. I will tell you pretty much every apartment that we write is inspected one way or another by the carrier. Sometimes they'll just do like a phone inspection, just give the insured a call and talk, go through, make sure they have these things in place. Other times it will be a physical inspection. Whatever the case may be, any loss control items that come back would be sent to our office and we would relay that information to you and give you the timeline on what the carrier is looking to have done to bring it up to help limit, losses for the insured, which is why it's important that these items are here. I would say fire extinguishers and smoke detectors are two of the most prevalent items we have listed out on our loss control letters that we send out. Fire extinguishers, most of the time they have them. They just haven't been currently serviced or tagged. So, it's simple calling a company that can come out and service them for you. We have a company, they come out every year, once a year. Half the time don't even know he's here. He just comes in, checks them, and then checks his little report, gives us a receipt and says, you guys are good until next year. And so they will, makes it easy. You can also, go out if you don't currently have them. Home Depot, Amazon, you can get the fire extinguishers on there, no problem. If they're brand new, that's fine. We're great with that. Same thing with the smoke detectors. If you don't currently have smoke detectors in your building, which especially in California, I know you would have them because it is a requirement by law to have them. But, in other states, it might not be as much of a requirement, but still the carriers are looking for it. So again, they don't have to be hardwired or anything like that. Again, you can just go to Home Depot or Amazon and, buy a 10-pack of them and have them installed. That's all the carrier is looking for is to make sure they're installed and operational. So for this one, let's say they need GL, building coverage, business income. They want equipment breakdown and property enhancement endorsement. So they're looking for a pretty enhanced policy. They're trying to give themselves as much coverage as possible. From the GL perspective, we are, would be rating on the number of units in this one. So this would be a 10 unit. That would be our GL rating. And then our building and our business income, that would be based on the limits provided. And then equipment breakdown we would include, and the property enhancement we would include depending on the carrier that we went with and what their enhancement form includes. All right, so this example is a multi-building apartment. So this one is a 24-unit apartment. They have a pool, they have a playground, and it's owned in the name of an in the name of an LLC. So in this instance, we have three two-story buildings, each 6,000 square feet, each with 8 units in it. To make this easy math for me, built in 1975. So with this one being built in 1975, that can be, automatically kick this out with mini markets these days because of the age of it. But, there are still those, like I said, there's still those markets out there that are writing the buildings that are, older than more than 30 years older, and we'll consider these ones as long as they've been updated. So for this example, this building, like I said, was built in 1975. It was fully gutted and remodeled in 2021. So they brought it down to the studs, brought the whole building, but all three buildings up to code, and then re-rented all the units out. And now it's 100% occupied and looks brand new, like it was just built in 2022 or something like that. So there, like I said, if there are those updates, that's the important thing with these older buildings, that they have the complete updates to the wiring, the heating, the plumbing, the roof. That's what our carriers are looking for. As far as the updates go with our carriers that are still good with the older buildings, we don't need permits or things like that, anything like that. The carrier is just looking for, update years. And again, like I mentioned before, your risks are going to be inspected. So again, these are questions that the inspector would be asking the insured to confirm, what years you had these updates done. Especially, main question is going to be like, what type of plumbing is there, and what type of electrical panels and electrical system they have, because, there are many carriers who have prohibited types of electrical panels, such as the Zinsco panels, Federal Pacific, the Murray, Simon ones, if there's knob and tube wiring, fuses, aluminum wiring. Those are things that could make the risk ineligible. Most carriers are not accepting risks with that type of wiring or electrical panels. As far as the Federal Pacific Zinsco panels go, we do have one market that will consider them, and they happen to be one of our markets that will write those older buildings. They don't have an issue with those panels like most other carriers do, because they haven't experienced any losses from them, so they're not afraid of them. They just want to confirm that they are in good working order, and that if there are any issues, that they are corrected, just to avoid any potential for a loss. All right, from a life safety perspective on this one, with the building being built in 1975, you wouldn't necessarily expect it to have a fire sprinkler system, but since it was fully gutted and remodeled in 2021, when they remodeled it, they added a fire sprinkler system. So now they have, they have the fire extinguishers in place, they have smoke detectors, and now they have that sprinkler system. And by having that sprinkler system, they now have that contract in place to make sure that's being serviced on an annual basis. Some of these buildings, sometimes I'll see the fire sprinkler system, and the last time it was serviced was 5 years ago. That doesn't really do any good, because what happens if there is a fire and it doesn't go off? Now you're just creating a potential for a greater loss. So it's really important that insureds, for whatever life safety measures they have in place, they have those annual contracts in place, or a plan in place that is keeping up and servicing and maintaining them, so that they are in working order in the event of a loss. And then for this one, similar to the last one, as far as coverages go, they are looking for general liability, business income, sewer backup, building ordinance, equipment breakdown, property enhancement. For the sewer backup, most of the time there is coverage included on the property enhancement endorsement if that's available. Some carriers end up doing it if you need a higher limit, they can consider that, and so it would just be a separate line with that higher limit that they're looking for. But sewer backup coverage is an important coverage to have, so I definitely recommend having it included. It's something that I always try to add on if it's available for anything I'm working on a quote on. All right. So since that last example I talked about was a multi-building example, so there was 3 buildings. So I want to talk about a statement of values and what we need as far as what we're looking for, because I need a breakdown of the building. So the statement of values provides me that breakdown, because when I'm going to my markets, some of my markets are able to consider blanket coverage and others aren't. And even if they can consider blanket coverage, they are still looking for this breakdown, because they need to have backup to see what limits apply to which building. So in this instance, just a little example of a SOV that we have and use in our office, that's just breaking down your locations and buildings. So we can use this for multi-building complexes like the last example I was talking about, or maybe your insured owns multiple locations, and those locations can either be single buildings and again, or multiple buildings, and this statement of values would break it down for you. So we would be breaking down each location and each building at those locations. From an apartment perspective, we would want to be breaking it down by the number of units per building, the square footage per building, your total building limit for that building, business income for that building, if any BPP is needed. Again, it's just a breakdown of those coverages that we're looking for and the rating factors, because that is important information to have. We can also use this, for any additional property components. If there's, carports or detached garages, there's a fence, those signs, things like that that I was talking about earlier. That's another good thing to include on your statement of values to make sure we're scheduling all the property coverages that is being needed. All right, and just to give an example of some attached versus detached property, so your picture on the left has a fence that's attached to the building. So in that instance, to provide coverage for the fence, we would want to provide the limit that the fence we were wanting to insure the fence at. We'd want to include that in the total building limit since it is attached to the building. We wouldn't read it separately because it is attached to the building, so that's where we want to add it. In the example on the right, we have a detached carport. And in the back corner, you might see that little enclosure looks like a trash enclosure. Those are separate. They're not attached to the building. You can see the sidewalk in between and the space. So in that instance, this is something that we would want a limit provided to us for because we would want to schedule that on as detached property. All right, we're going to talk about a mixed-use apartment. So again, for me, mixed-use apartment, by definition for me, is there's commercial units on the bottom and residential apartment units on the top. So in this example, we got on the first floor, there's our commercial tenants, like I said, and then there's 6 units above, and this one's owned in the name of a trust. And so it's a 3-story building, 6,000 square feet, built in 1929. There we go again with the we're talking almost 100 years on these ones. Like I said earlier, we still do have those markets that don't have an issue with these older buildings. I've written things as early as like 1890. So definitely have the options for that. When you're writing the older buildings, depending on the carrier, there may be some limitations from coverage perspective. They may have a special form that they're going to add on. Especially if it's maybe a historical building. Some carriers, have an issue and won't write historical buildings at all. Other carriers will write them, but they have a specific form relating to it being historical, adding it on. I'm not saying necessarily this one's historical, but just to keep that in mind. And then this one was fully gutted and remodeled in 2015, so it was being brought up to code. They have the important life safety measures in place. And then this is important information. Again, like I said, having that because it's part of the inspection process. And when you are rating this information and providing it to me for a mixed use apartment, it's important to provide the total square footage of the building, but then to also break down the commercial square footage versus the number of apartment units, because that's what the GL is going to be rated on. Your commercial part, we will rate that as an LRO class code, and we would put, so for this example, just to make math easy, we'll say the bottom floor is 2,000 square feet. So that would be our commercial rating factor. And then for our residential rating factor, then we would just rate the remaining part of it. That 4,000 square feet makes up those 6 apartment units. So then we would be rating on 6 units for the GL. So the GL would be made up of 2 class codes. And again, for this one, they're looking for that building coverage, the business income, sewer backup, equipment breakdown. And again, if you're looking for whatever coverages you're looking for, need to be listed out on the submission, preferably on the Accord forms. Some people will put them in the email, which is fine. I can make sure they get added on. So we are offering the coverages that you're looking for, because if it's not necessarily explicitly included and it's not something the carrier automatically includes, it may be missed on your quote, and then you might have to come back to me and ask me, hey, can we add this on? I'm generally pretty good about if, I know there's like a coverage you've asked for that we can't consider, to make note of that for you so you know why we didn't offer it. All right, and then our last example is going to be a 1 to 4 family dwelling. I wanted to talk about these with the apartments because I do see a lot of these, and people will be like, oh, I have a 4-unit apartment. And like we talked about in the beginning, that's not necessarily considered an apartment by most carriers because most carriers are considered an apartment 4 units or more. So for this example, this is going to be a duplex owned in the name of an individual. Now, with it being owned in the name of an individual, depending on what state it's in, like California, for example, if a 1 to 4 family dwelling is owned in the name of an individual, most commercial line carriers aren't going to be able to offer property coverage because of the earthquake requirement in California, because, it might not be a coverage that carrier offers. So they're not able to provide coverage for that one from a property perspective. They could do the GL. And then I've been seeing this recently in Oregon as well. If they're in the name of an individual, starting to be run into that as an issue as well, which I'm going to assume is tied to an earthquake requirement as well. But like I said, depending on the carrier and their underwriting guidelines, being owned in the name of an individual in California may not be an issue for them. So this one, pretty much brand new frame building, built in 2006. Again, they have smoke detectors present because it's just a duplex, so they're not thinking that they necessarily need a fire extinguisher. But it's important that they have them because that's something the carrier would require and be looking for as another life safety measure. So either having one installed on the outside that's in a common place where either unit owner could go and get tenant can go and get it if they needed to in the event of emergency, or if each unit had their own fire extinguisher inside for their use. I see we have a couple of questions, so I want to get to those real quick. So I have some questions. The first one, what is your max building limit? Honestly, it really depends on the risk these days. Like I said, with all the changes happening, it's kind of hard to give a definite answer because it really comes down to the risk. I will tell you, we have some markets that cap out at 3 million TIV. We have some that cap out at 10 million TIV, some that cap out at 20 million TIV, and we have some other ones that can go higher, but it really comes down to how in the box is it and does it fit that carrier's underwriting guidelines. So I would say our average is probably no more than 20 million for the most part. But again, if you have one that's bigger, feel free to reach out. We can definitely talk about it, and I can let you know if it's something we have a market for. Because just with all the changes, it's really hard to just kind of give a blanket answer for that one. And then are our markets admitted or non-admitted? We have both available, but again, it comes down to the risk. I would say for the most part, I've been quoting apartments on a non-admitted basis because the apartments I've been getting have been older, and my preferred markets aren't able to consider those apartments because they're older and don't meet their age requirements anymore. So I would say for the most part, recently I've been quoting on a non-admitted basis. I will also say, depending on the risk, sometimes we're having to split the coverage, put the GL with one carrier and their property with another, just to try to get them the best options we can provide them, best from a price perspective, best from a coverage perspective. So I'm sure as an agent, you're going to start seeing a lot more of that. Or, if something's in like a high wildfire area, we probably won't be a market for the property because our carriers aren't considering things in that area. But we can help you with the GL, and maybe you have another market that can help you with the property. All right. And then we're going to talk about what we need to get a quote. So what I need from you is an Accord 125, 126, and 140. Please be sure to include the number of units, their annual rents. If there's any pools or playgrounds, any of those supplementary, amenities they might offer. Maybe they have a clubhouse. All of that information I need because it is part of rating for the general liability. So we need that information. I will get submissions and the Accords will just say it's an apartment, but then won't list the number of units. So I have to go back and find out that information from you guys. A supplemental, we can quote off of pretty much most carriers' apartment supplementals. That's not a problem. We also have a supplemental that is available on our website. And then the one on our website also has a little screenshot of everything that we would be needing for a submission as well. But I do need an apartment supplemental. So sometimes I'll just get the Accords, and that's one thing for sure you'll hear back from me on is needing an apartment supplemental. Also a statement of values, like we talked about earlier. If it's a multi-building or maybe a multi-location risk, having that statement of values is important. And then 3 to 5 years loss history. More and more these days, these carriers are wanting to see the loss history. We can, with some of our carriers, still quote subject to clean loss history. But if there have been any losses, we will need the loss runs and we will need loss details. If you've done business with me before, I'm sure you've seen my little spiel where I'm asking for the loss runs, and then loss details. And so what happened, have all the damages been repaired, and then what actions have they taken to try to prevent those types of losses from occurring again. Target premium, I know it's kind of tough these days with everybody making some so many changes to the market. But again, if I have that information, or maybe even the kind of expiring premium, it can definitely help. Or maybe you got another quote already, and so you have a target based off of that. If you could let me know that information, I could let you know if it's something we would be more competitive on. All right, and I saw a couple more questions come through, so let's take a look at those real quick. Oh, one of your questions is on my next slide, so I'll get to that in a second. And the other one is about claims. So like I was just saying with the losses, depending on the type of loss and how severe it was, it is something we can look at. It really comes down to the loss. I will tell you, I've seen a lot more tightening up from carriers accepting risk with water damage related losses. But again, that could come down to the size of it, how frequent they're having it. I mean, if they're continually having water related losses, I'm going to say it's not something we would really have an option for, because it doesn't seem like they're doing anything to try to prevent those from happening. So like I said, it really comes down to the type of claim, how much was paid out, and what steps they've taken to try to help mitigate from those happening again, to see if it's something we could look at with our markets from a claims perspective. All right. And then also I said, I'm sorry. Other things to, information I'll probably be asking for, or, looking for from you, if not already included on your original submission. If there's any vacancies on our apartment supplemental, there is a question to ask you what the vacancies rate is, which is important to know, because some carriers do have restrictions on, the vacancy percentage that they're willing to consider to write it as an apartment. If it's too vacant, then they'll probably end up having to write it as in a vacant building and not necessarily on apartment policy form. A big question I ask most of my agents is the type of plumbing, because that can dictate market availability, and it can also dictate if I can offer special form replacement costs. So if your buildings have galvanized plumbing, then I'm going to only be able to consider as basic ACB. On galvanized plumbing, the markets that I can take those risks to with the galvanized plumbing are only considering those on a basic ACB basis, not a special form replacement cost basis. Like we talked about earlier, the electrical panels and the type of wiring present, that's important information to know, because it will dictate, again, what markets I can go to. And if they have those prohibited types of wiring or electrical panels, I may have to pass on the risk. If it's a mixed-use building, having that rent roll or tenant list, providing the list of the tenants that are occupying the building. From a commercial perspective, I don't need it on the apartments from a residential perspective. It's more for the commercial use, just so we know what type of tenants are in the building, and as long as they are applicable to the carrier and are tenants that they find acceptable. Now to the question about determining building limits. So for me, when I get a submission and I am taking your building limit and dividing it by the square footage to come up with see what your cost per square foot is, I will say lately, just because of, cost of, just the increase of cost of goods in general, I've been seeing a lot higher building limits. And I'll have to say, depending on how high that cost per square footage is, it may or may not be something we can consider. I've had some people try to get $600 or $800 a square foot, and it's not something our markets are going for at this time. So I would say probably the most I've been able to go is about $375 a square foot. But again, that could vary by carrier. And generally when we get into those higher valuations on it, my carriers are going to be looking for a replacement cost estimator or a building valuation report. I know some of my agents can pull those through some of their direct markets that they have that like built into their system. So getting that report, some of my carriers require a report regardless of what the cost per square footage, because they have over a certain limit. They require us to provide a backup for them to confirm the limit. So you may see that as a binding subjectivity on a quote that I provide, because the carrier requires that as for their underwriting file. If it's, a new client to you, I would recommend, probably starting your base limit if you're not sure where to start, looking at what their current coverage is, figuring out what that costs per square footage, and see if that sounds like a reasonable number. Again, if you have the ability to run that replacement cost estimator, that's always also a great place to do it. I do want to say, don't base the limit off the market value. I will get some where people are wanting to tell me that the apartment is, they purchased it for $3 million, so they want a $3 million building limit. Just because they purchased it for $3 million doesn't mean it's going to cost them $3 million um, rebuild the building if there was, a full loss. So those are pretty much the items that you would, see from me, the previous screen and this one, and what I would need to get a quote. Like I said, I'll review your submission. If I have specific questions, I'll definitely reach out to you guys and let you know. And then, once you give me back those answers, determine if we can move forward or not. I'm going to turn this back over to Anae for a few more slides, and then that should be it for you guys.
Great job, Michelle. And I'm going to close with just letting you know that we have a whole library of proposal templates on our website that are designed to make your life a lot easier, because it's so much work to write, to have a proposal for every type of business and the specific coverage that they need. So here's a sample of a template that you can take and get off of our website, download it, make it your own, put your logo on it, and it's a Word document, so it's easy to customize, and it's really designed to create a template. With the pink areas being the areas that would be filled in for the specific insurer that you're working with. So that's a good idea. And never forget to invoice the client when you propose insurance to them. So this is a great tool for you to use. And we have marketing flyers that can help you present to new clients, and you customize it, put your name in here, and you can. It's a great way to cross-sell coverages at renewal. And you can do apartments. We've got it for EPLI, cyber, all the additional. I don't know if we have a fidelity one, but if we don't, we can put one on there for you. And then you can easily promote your agency on social media. So get creative with it, because that's what marketing is all about. It's connecting with people and selling your service. So again, thank you for joining us. The questions were really valuable and brought some good conversation forward. And Michelle is available. It's Michelle at CIDinsurance.com, and you can reach her directly. We are responsive in our office. You call, we answer the phone. You email, we answer your email. So again, we look forward to doing business with you, and those that already are working with us, thank you for your business. Have a great day.
Thank you, everyone, for joining us.